Hey guys, how we doing? This is another insightful episode with Tony Greer. He is the founder of the new podcast Daily Dirt Nap. Is that correct? I'm going to let you introduce yourself.
That's all right. I'm editor of the Morning Navigator newsletter, and I run a podcast with Jared Dillian called the Macro Dirt Podcast.
Oh, okay. Yeah, Daily Dirt Nap is Jared Dillion's handle. Mate, every single intro that I do, I always mess it up. So that's brilliant. It's like a
Right.
consistent start every single time. I respect massively what you and Jared both do in the TradFi world. That's why I asked you to come on this podcast. And as you can already tell, it's pretty informal. I'm not scared to make myself look stupid. I do it quite a lot. So excited to get in to talk to you. So just quickly before we start, like what are you particularly working on at the minute? And I've got a load of questions for you about exploring different areas of macro, hopefully to pick your brains today.
Yeah, man. I'm working on the usual. I've got my business in the mode where I am basically in a happy place and just rowing every day, right? So I publish my newsletter 3 times a week about the markets. I have positions on there that I manage in front of my clients and to give people trade ideas and some guidance. Like I said, we started the podcast, Jared and I, about 18 weeks ago. We're going on episode 19 next week. We've got about 500,000 views so far across all platforms, which is cool. And I also work with Clear Commodity Network, which is a new and sort of up and coming company that's going to be a really great sort of cultivator of commodity news. And I work on a podcast with them as well called the Oil Ground Up Podcast, where we try to talk to people in the physical markets a little bit more, and then kind of apply that to what's going on in the world real time, if we can, in the oil market. So those have been my exciting projects, man. And I wake up and I focus on those 3 things and the markets and keep plowing away every day. That's it.
Yeah, that's awesome. And as we said off camera, I actually watch your podcast quite a lot. I've shared it a few times on Twitter because I get a lot of exciting information from that. So thank you. And I'll be looking out for your new work with, what were they called again? Clear Oil, did you say?
Clear Commodity Network.
Clear Commodity Network. Awesome.
Yeah, oil and
So
gas.
I'm just going to start hammering you with questions now, to be honest, brother.
Let's go.
Let's start with a little bit of a more broad question. What do you think will happen in the US election? I'm not looking for your political answer, but I'm looking to see what you think will happen with the markets, like around election period. What have we got now? 2.5 weeks until it's election period. What do you think is going to happen around there?
Volatility, right? So we don't know exactly how or what, but you have to think the market is, the market's never dominated by a president, right? I feel that's definitely the case, but there is always volatility around a new administration, changing of the guard, anything like that, right? I think we've seen a lot of the volatility already, to be quite honest with you, because at the beginning of the race, Harris was somehow dead even with Trump, right? In the polls anyway, right? So they were even for a little while, and you were like, wow, this is closer than anybody thought. And the market was trying to sort out what it meant for Trump, what it meant for Kamala. And then all of a sudden it was Trump breaking away and the alligator jaws came out, right? On the real politics, on all the polls. And Trump got ahead, and clearly the S&P went on another leg up, right? From let's call it 5,500 to 5,800 or so, right? That was the Trump is winning leg, in my opinion, right? And I'm not saying it's necessarily over. There's going to be volatile periods in between this. So I think we're going to trade in this Trump is winning leg right up into the election. And then we're going to have to see, right? I think that either way, the market probably sells off.
Yeah.
Right? Because it's just like the market is responding to Trump getting incrementally in the lead, right? So I feel like if it's responding to that now, then there has to be a sell the fact event when Trump gets elected, or maybe on election night, it's getting closer to seeing that he's the clear winner or something like that. I would expect that to be the most likely scenario if we just call everything at face value, right? It was dead even, and now he is utterly running away with 2 weeks left, right?
Yeah.
Seems kind of obvious, right? Seemed kind of obvious, though, that Hillary was a 92% favorite against Trump in the 2016 election, too, and that she was going to run away with that one, and that didn't happen. So we have to now be careful. Like, what if it's a big, crazy surprise, like Biden beating Trump the last time in the middle of the night and things like that? So we don't know what's going to happen with that. I have a feeling, though, that that story will also manufacture a sell-off, right? If Trump wins, it's the, okay, this run has come to an end, and now we sell stocks and see what happens and listen to Trump and listen to what's going to happen. If it looks like the Kamala thing, that's going to get where we don't have a winner over several days after the election or something like that. I have to call him back. Sorry about that.
No problem.
Um,
You were saying about
so
Kamala winning.
Yeah, yeah. If if it looks like something where a day or two after the election is going to go by and we don't know, like that's an uncertainty that I think would create the same sell-off.
Mm-hmm.
Right. So I kind of feel like we're going to crescendo into like the weekend before the election.
Mm-hmm.
And then on the Monday before, who knows? And then as we're tabulating the votes, I think it's going to back off. But my idea is to buy a pullback if there is a steep one on a sell the Trump fact, and to sort of get out of the way immediately if it's a sell the Kamala fact, because nobody has any idea what the hell a Kamala Harris presidency is. She's the farthest left candidate that's ever run for office, and basically Marxist. So it would be a little bit hairy for the U.S. to figure out how she's going to, play financial markets. You would doubt that she would be able to get things through with probably a Republican Congress or something like that. So, man, there's a lot of things to think about, but if I would say one thing that I can stick to, it's that I think we crescendo into the weekend before the election, and then, man, get the seatbelt on, put the helmet on, and have your eyes wide open.
No, I had similar thoughts, but like I just keep going in like circles in my mind, basically, because obviously, again, this week we've seen like an increase in liquidity in the US, or an increase in the Fed's balance sheet. One of the two, I can't remember exactly which it is, and then if you also say then that people are pricing in the Trump election and that, like, I would have thought things would rally harder, but then some things that do make sense or some things that don't make sense to me are like the DXY has been rallying hard, but at the same time so has gold, and at the same time so has the S&P. Like, how does all this like tie together? So that kind of leads me to my next thing, or you interject there, go on.
Well, I was going to say that, yeah, the one thing that is not going up is bonds, right? And I think that, with rates falling, I think it's kind of I think we're reading into a potential for a Fed policy error, right? So they did a great job manhandling inflation. They got it from headline 9% down to 3%, right? Hiked rates. They literally almost put the genie back in the bottle. And we get to this period where we had this big growth scare with weak economic data, and the whole posture shifted toward the next easing cycle, right? And at its peak, there were going to be 9 rate cuts next year, 50 basis point cut as the first one. And that seemed really excessive. But what happened coincidentally, just as we pivoted into the Fed's rate cut cycle, the economic data started getting better.
Pick back up again.
Right? City Economic Surprises Index has gone from -40 to +20 in like 3 or 4 weeks time. And that's just the data being incrementally better than expected. Remember, we got that crazy payroll number, then we got the beat in retail sales. The data is lining up for the Fed to be easing at the wrong time. Right? So that put through an absolute wrench in the bond market, where treasuries traded off really sharply. Yields in the 10-year, twos are right back to above 4%. Break-evens, 5-year break-evens rallied 50 basis points, like from 1.8% to 2.3%. And the market got this inflation buzz back, right? And if you remember in 2022, the risk to that market was headline inflation dislocating the bond market lower, right? Because the bond market's going to respond to that and back off with headline inflation. Rates are going to go up. Everybody buys commodities, right? Oh, okay, inflationary cycle. We're going to buy commodities now. We're going to sell tech. And that was the 2022 trade, right? So you have to consider that there's a chance that reemerges somehow. But then, like you say, there's so much abundant liquidity that we're still playing an all-time high breakout in NVIDIA right here, right? $141 at last sale. It doesn't look like anything's curling over in the stock market to me. So, and now that we've got the data improving, we're in a situation where the market is reacting to that with emotion. When the data is better, it's celebratory, right? It's like, oh, we're coming out of this growth scare. This is better. Companies doing better. Earnings better, right? S&P can rally. And when the data is worse, it's like, oh God, the Fed's gonna have to cut more. They're gonna have to cut more, cut more, cut more. And then there's a little bit of push and pull the other way. But I think that kind of helps balance out a little bit the idea of kind of what's going on in the world. Hopefully,
Yeah.
the bond market's the counter lever for gold and S&P and Bitcoin and all that stuff.
Yeah, and I think that you've like pieced an extra piece together that I probably hadn't like brought in my own head. I think because you were talking about how almost now we're maybe leaning back into uncertainty around like inflation, monetary policy again, when we were well, history tells us that pretty much when the Fed starts cutting, it's only cutting or pause for like a prolonged period of time. But you're now suggesting that people are a bit worried about the fact that the Fed might actually re-revert in policy, or not, or might have got something wrong potentially, which makes. Go on, sorry, what were you going to say?
No, I want to listen. I want to let you finish. I'll never interrupt you until you're done.
No, I was just going to say, which makes, because I haven't had an argument for why Bitcoin hasn't been going up, apart from the fact that I thought that we could pretend that we're over leveraged in terms of like open interest. So I've been watching for that, and every single time we've hit this level of open interest, we've had a flush down in Bitcoin. So that has been my main argument, because I've been calling for a pullback, and I haven't understood on a macro level why Bitcoin hasn't followed other assets that it has at least in some way like had some correlation with in the past. And you could say that it tracks the RTY and breadth hasn't opened up or whatever, and that's kind of starting to happen now. But I haven't had a solid argument, but now it makes more sense, because at the start of the year, what I wrote was we'll probably see continued uncertainty in the markets and people will move to gold. And then when we start to see monetary policy be more loose, people will rotate from gold into the fastest horse through history, which has been Bitcoin. But now you're saying because there's no certainty on that monetary policy being loose, that might be, in my head, why Bitcoin is not breaking out. Would that be?
That's accurate. That's totally fair. And I think that's the right way of looking at it. And I can add another piece to that puzzle. I threw a poll out there. I don't know if you saw it, Will, where last week, last week at the end of the week, I said, what do you want to own to the end of the year, right? And I gave very specific choices, right? Because everybody's talking about the silver breakout now. Everybody that I talk to is bullish Bitcoin. Oh man, Bitcoin looks great here, right? Oh, we're gonna get inflation, Bitcoin's gonna go, right? People are bullish gold. People are bullish the S&P. So I wanted to say, like, what's the story? Or what do you want to be in for the rest of the year? I got 13,000 votes. 55% chose Bitcoin. Vast majority, right? And the rest of them, gold, silver, S&P, were the next 2, 3, and 4 that got like 14%, 13%, 12%. Right. So Bitcoin is, to me, just, the laser eyes are all in it. They're all chest beating again. We're back to 70K or so. The prognosis for Bitcoin couldn't be better, in my opinion. Right. We're blowing the doors off of our debt limits. We're blowing the doors off of our interest expense, $1.2 trillion a year. It's 25% of collected U.S. taxes. Right. Wow. This is the death of fiat currency right in your face, and why gold and silver are breaking out. And so that's why I think that maybe, Bitcoin might just be lagging. If you're following I'm sure you're following the inflows in the ETFs. They've been massive. They've been so consistent. The corporations want Bitcoin on the books, and I think that that's another great sign for it, for God's sakes, And so my point is just that it's hard to make money at the highs when everybody's loaded up long looking around, right? Like we're looking for the next incremental push, but everybody's got it on.
Yeah.
Right. So you need somebody to affect their portfolio and say, yeah, you know what, we need 3% more Bitcoin. Let's go. And then that maybe sparks something. But
yeah, because that's really been something that's been like playing on my mind. It's like exactly what you've just said. Like people are long, everyone's bullish. All the macro things are basically saying, yep, load up, get involved, but we're still not breaking out. So something there is fundamentally either wrong or lagging, and they're the things that I've been really watching for, especially with the open interest. Because the thing that I've speculated, and it's like a conspiratorial thing, is like that something's going to escalate before or after the election with either like geopolitics or trigger something, because I feel like we're so levered up and we're so like expecting something. As soon as we start to get like the scales just tip, then everything could just fall off pretty quickly. So that's what I've been writing about, potentially seeing that happen. So I've been saying spot's not a bad place to be in crypto, but having leverage on at this point, I wouldn't be involved in leverage at the high, especially not at the highs.
That's how I'm looking at it, and I think that you have to be careful if, as you say, a risk-off geopolitical event hits the tape. You better watch out for Bitcoin, right? It's a risk asset. It's a levered bet on U.S. risk assets, and that's probably going to get punched in the nose if risk assets back off. The S&P will. At this point, gold will, silver will get annihilated because everybody's long looking for $50 again. So yeah, we got to be really careful of all kinds of volatility through the election, but what I'm trying to do is kind of stand my ground in a couple of the trending securities, right? Like I want to be able to buy the dip in gold. I want to be able to buy the dip in the S&P. I want to be able to buy the dip in Bitcoin. So I'm really not here right now loaded up position wise like I have been previous times this year. I went long the S&P last November and I sold it in July. And there were times there that I was loaded to the gills with stocks. And now, man, I am at fighting weight, ready for the next opportunity in the next 2 weeks. I'm playing, at the $5 blackjack tables during the day and kind of picking away at things here. And I'm excited for what's to come. I really am. I think it's going to be a hellacious turn into the new year. I think it's going to be Trump, and I think the market's going to go up another 2,000 points.
Well, I can't say I disagree, and it'd be an amazing outcome, hopefully, if he follows through with policy, what he's been talking about for crypto. But I do want to pivot more towards some more macro and test my knowledge a little bit. So can I ask what you think is going to happen with gold? You said you wanted to buy the dip on gold. I think I shared with you maybe a few months ago, I'm putting you on the spot here, you probably don't remember, but a 3-month gold chart, which is where when the RSI was broken out historically on the 3-month, we've seen quite a significant rally over the next few years, and the target of that would actually be around $10,000 gold. Do you think that's an impossible thing to see in the next 5 to 10 years, or?
I wouldn't say anything is impossible in gold. Absolutely not. I think it should be twice the price that it is now. I'm wondering what the hell is taking it so long, and I'm thrilled that at least the gold that I have is up 40% on the year. That's been one that a lot of us have been kind of sitting and waiting on, and I'm very specific with physical gold and gold phys, PHYS, Sprott Physical Trust is what I've been long. And it's finally come to life, but I don't really want to rule out any upside targets. I just wanted to call the chart up again because I wanted to see something. Gold consolidated between 1,600 and 2,000 for 4 years.
Yeah, it's crazy.
4 years. When it breaks out of that range, do you know what it's going to do, Will? It's going to rally for 4 years. I don't think it. I know it. I've seen this before, right? Gold was trending in the first place, right? We got over our skis for the first run up to 2K, and then we just traded sideways, right? We back and forth. And it took 4 years for gold to resume its trend. And I take that very seriously. And to me, gold is just following through on the breakout beyond 1,800. Still the same trade. Should keep going. Yeah, there's going to be some volatility at some point when, more people start telling you to be long gold, right? Like when the outsiders start coming in, and then you say, okay, maybe this is extended now and we'll have a trade opportunity to buy it cheaper. But it's trending and you got to stay long physical. That's the case. We're witnessing the death of fiat currency before our eyes. So you have to stay long physical.
And I think I align, and I will send you that chart. I don't know if you've got it, because I just want to get your opinion, because as I said, I'm not really that, I am macro focused, but I'm not too public about that. But the thing that I want to ask as a counter question for that then is, do you think that has any long-term repercussions to the equity market specifically? If you're saying with the death of fiat, equity should probably rally, I guess, if fiat becomes weaker. But so are you in the same boat as me, thinking that at some point the DXY is going to break down out of the range that it's in, lose 100 and potentially go to 95, maybe lower, or are you?
I have been thinking that for so long, Will, that I gave up on thinking that. Quite honestly, I've been a dollar bear for probably longer than I should have. And the thing that I learned a long time ago is to let the dollar and bonds be the speedometers on my dashboard that tell me how fast I can drive my commodity and equity trades.
Okay.
right? Because I noticed that I was making fortunes over fortunes in stocks and commodities every year and giving the money back, trading the dollar and trading bonds and things like that. So I decided to stick to my knitting and put those two securities on my dashboard instead of on my trading pad.
Yeah.
And my P&L exploded. So I stick to my knitting now, and I stay in sort of in the stock market, sometimes in tech, sometimes in commodity-based stocks and things like that. But that's what I've done to sort of change my footing with this type of market.
Okay, great. Thank you for that. And then,
Yeah, the dollar. So yeah, I didn't mean to shy away from the dollar question, but I'm saying I've been thinking that for so long.
mhm,
Like I'm generally a dollar bear for no matter what, but I don't, I don't get through that. I don't see a risk of it losing reserve currency status,
mm,
right? We're paying attention to the BRICS and what they're doing and the new commodity markets, et cetera, et cetera. But as a percentage of transactions that take place on the globe every day, right? It's all dollar.
yeah.
So I don't know how we're going to possibly break that reserve currency status down. I think it'll change over time, but it's going to take a long, long time.
Yeah, no, I'm in that same boat completely. I don't understand how the narrative could be that the DXY could drop significantly. Like technically, it looks like it's possible, but I don't know how that would even look because I don't know what would start to gain more percentage on the dollar, and not at that rate. I don't know, but maybe short term if they've got some agreement with like Japan and potentially with China, because Japan, like again now the yen starting to lose strength against the dollar. Did you have any thoughts on that? That was actually one of my questions that I've got out the back of the DXY.
On dollar yen,
Yeah.
I mean, I really don't. I kind of throw the dollar into a basket because I'm not an FX trader, and I keep an eye on it and watch it for the sort of sentiment of what's going on. And I'm
Mhm.
kind of bullish dollar yen again. It
Yeah.
recovered all the moving averages again, and that's why I take my bearish dollar view and throw it out the window. I mean, that thing just came back from 140 to 160 in 2 months, a month and a half. It's trading like Bitcoin, you know what I mean? So it's a little hairy. And like I said, I try to just use that as the speedometer
Sure.
and
And
not
and
and
that
not as a risk plan.
and that's why like I'm so confused with the dollar as well, and I try and use that as well for an indicator because it's been quite negatively correlated with Bitcoin, or inversely correlated is probably the word to use, or at least when the DXY has come down, it's actually created like a launch pad for Bitcoin to go up, which makes a lot of sense if you think about like liquidity provision. So
Totally.
another question that I've got is around oil. Now I'm not an oil expert at all, but I would like to know your thoughts on oil, especially around if you know much about the geopolitical tension in the Middle East, which I don't, but your opinion on what you think could happen there and how that could affect the oil prices. That's quite a big question, sorry.
No, it's okay. The oil market's been really difficult, and oil is just to say is like one thing that I'm comfortable trading a very real position in oil. Like I am generally built to be an oil ranger, right? And I don't see any opportunity right now in
Mm,
terms of like where I think the next $20 is, and it was great to play while it was in play during the, Russia's pushback on the NATO invasion of Ukraine when we had that run to 130 and it was volatile. Now it looks like we're really well supplied,
mm,
keeping it kind of capped on the upside. I mean, U.S. production is off the charts. Saudi Arabia and OPEC, their production is really, really steady. They've got people trying to sell more than their quotas, et cetera, et cetera. So there's plenty of oil and plenty of liquids around, right?
mm,
Plenty of heating oil, plenty of refining capacity. The refiners are not in any emergency to chase oil up a flagpole because they have so much draw on their product demand yet, right? Because the commodity, the economy is kind of sideways, is not really firing on all cylinders. You know what I mean? So oil's kind of capped with that. And then I think what's keeping it from sliding into the 60s is a little bit of Mideast risk premium. And I mean a little bit, because no matter how you slice it, Will, $71 oil does not have risk premium built
mm.
into it, right? It's got a couple of basis points, not a several percent of risk premium or not even $20 of risk premium, right? So with those two levers pushing and pulling against each other and the price looking really comfortable here in the high 60s, low 70s, I'm sticking with my position of being long E&P companies, and that if there is a Trump administration, that they will be set up for success. That's the one view that I do have in the oil market, because it seemed really obvious that when Biden took office and started off with all those executive orders that drove the prices higher, et cetera, all the oil CEOs in the United States took their IT spending and they put it right in their pocket because they don't have a friendly administration. So what the fuck is the sense of spending money when this guy is going to go and crush your plans, cancel your leases? I mean, it was chaos for them. So I think you get a drill baby drill president
Yeah.
who probably prefers $1.25 a gallon of gas if he can make it happen. And everybody's going to profit from that. The price of oil is going to go down. They'll probably hit the stocks first, but they are set up so well for success. I think they start IT spending again in a Trump administration, and they are delevered and they are ready for a strong economy. And so that's why I think that the energy stocks are my preferred play. I've been in them for quite a while now, but they haven't scared me because, like gold, to me, they look like something that's just consolidating for a couple of years. And when the breakout happens, it's going to go. And it just lines up with me that it could be during a drill baby drill president that we may get in 2 weeks. So,
and like Trump wants to bring a lot of the building back into the US, and so it will make a lot of sense for that. For all the different, it kind of relates to everything we've talked about from the DXY all the way through, because we think that he'll weaken the dollar, don't we, like over time. So that kind of would play into our potential thesis. But a really random question, I guess, off the back of that is just because I looked at this chart a long time ago. What do you think of uranium?
bullish.
Bullish.
I've been bullish. It's been on the bullish side of my radar screen. I personally own URA and Sprott Physical Trust. I've been in those for a while, so I am talking my book. But the market was begging to get knocked over, right? We had as Jared Dillian puts it, we had all the assholes run into the uranium trade at the highs, and every Tom, Dick, and Harry was all of a sudden long uranium. And just because of that, we got a 30-40% pullback in the miners, 20-30% pullback in uranium, even though there's very little uranium around. The price still went down. The physical trust price went down. And it was basically on its back, begging not to get knocked out, right? And then the Microsoft 3 Mile Island partnership. And then there was another partnership. Oh, man, I forget which one it was. I'm a dummy. There was another headline where I think, was it Amazon and somebody else invested in another nuclear facility? Or Google and somebody else.
It was, yeah. I can't remember who
Yeah,
they,
there's
but I remember
one.
that.
I know it did. The whole headline escapes me, but it was another major that was investing, and that sent uranium miners through the fucking roof, right? And so that recovery on that that looks like a big headline to me. Like we now have to feed the AI energy demand, which is going to be hellacious. It looks like, if you look at NVIDIA, that AI is going to be with us for quite a while and be a very serious topic in the markets. And if these companies are pairing up with nuclear facilities to get cheap, efficient fuel, this seems like the beginning of something very new going on.
Yeah.
So now I think that you got to get in them again with the sea change that we just saw in the last month, and the stocks respond. They didn't take those headlines and go, they took those headlines and everything came alive again. Cameron right to the highs again. The whole industry comes alive. So now the Sprott Physical Trust uranium is looking to have a massive recovery into the bull trend, recovering the moving averages, et cetera. So I think that that's a trade that you want to be in for the next several years. And that's a trade that's going to grow with, it's going to be cool because it's going to be like a frontier bull market in AI energy and partnerships and things like that, right? And you're going to see it's going to be like the early stages of .com bubble, where you see these exciting new headlines.
Yeah.
Right. This company pairing up with this company doing this company's building more reactors. And it's like, holy shit, this industry is coming to life right in front of my face.
Definitely.
And that's tough sentiment to fade. That's like early stage bull market stuff. So that's how I feel about uranium.
Yeah, no, that's a brilliant, perfect answer for me, because like I spoke to you off camera that I do some asset management for somebody, and one of our positions was in uranium, but I don't know much about the fundamental side of it. The reason I opened it was because technically it looks so good. Complete Wyckoff accumulation completion, just haven't seen the breakout as far as I'm concerned, and I loved that chart. So we got in, and it started to pay off like the last few days or so. Had a little pullback yesterday. I haven't seen it today, but I did think about the energy things, like when I see a technical, I then try and put a narrative to it and think, oh, what's going to happen there? And I'm not massively fundamental on uranium, so I'm glad you've filled me in with some of those thoughts as well. Thank you.
I'm not the guru either. You want to talk to Harris Kupperman about anything uranium to get the ounces and the pounds of uranium story and how much there is and where it is, and he's got that all covered. I'm kind of a semi-educated participant.
Well, that's how I feel about everything, to be honest.
Yeah, it is, right? I mean, you can't be an expert at everything, for fuck's sake.
So I'm going to ask you. Actually, I'll quickly just going to digress from something, and nothing I've got written down here. But we talked about nuclear and energy going forward because you mentioned AI. But I'm so blown away about something happening in AI at the minute. There's a Twitter bot that has basically been coded by like a philosophical guru, and it's learned like sentiment on Twitter, and it's then created a crypto token, which has now gone to $800 million in the last 2 weeks. So it's learned about people and how they react with each other on Twitter, and then it's
Wow.
not manipulated because it can't control anyone, but it's asked someone to create a token, and then it's pumped that token to 800 million. And I think we're living like a financial revolution, but like not a lot of people are paying attention to it. And do you think that the drive for things like that are going to like change our views on energy? Because you were talking about nuclear for energy for AI. It's like I'm just trying to ask you what you think of on that in general. Really, I think is my question, because I haven't really had the chance to discuss it with anyone because I don't really know anyone who talked to me about it.
Yeah, no, the energy market is really dynamic right now, right? We had this. There's been so many things going on, even especially since the Biden administration started, right? We had that huge run up in solar stocks, right? Biden's going to be the what do we want to call it? The wind and solar energy president, and we're going to do all electronic vehicles and like that. And so the solar sector ran to the moon. And then as Biden got elected, it peaked and started falling again, right? And now that sector has leveled off, right? We had the same thing happen in uranium, like when the energy sector got crushed because he's anti-fossil fuels. We had the uranium sector come to life and then get crushed and come to life again. Natural gas is out there sitting, dirt cheap between $2 and $2.50 lately, and so there's still a lot of merit to that as power, right? And so it's hard to see like where the focus is going to go, but I just feel like the AI craze is going to be a really definable story that you're going to be able to circle the players and the stocks and the sectors that are going to be able to go to that. I mean, I don't even know if I'm answering your question or if I'm going in the right direction for you, Will.
No,
I
you
really
are.
don't.
Like, I just wanted to just bounce the thought to you and just see what you were thinking with that. But we'll move on to. I've got one or two things I want to ask you, and I normally finish the podcast summing it with just a few personal questions about like who
Yeah.
you are and that sort of thing. But
Yeah.
one thing I wanted to ask: what are you specifically trading right now? We've gone over like most of it, but is there anything you've really got your eye on that you think is a killer right now? Some alpha for us, basically.
Mm, you know, let's see. My pad. Well, here's one thing that I think it can be played, right? There was one very clear breakout to me when we got our last headline inflation data, right? The week that we got CPI and PPI, which were both a little hotter than expected, if you remember,
Mm-hmm.
we saw breakouts across cybersecurity, cloud computing, and software. And software, and all three of them actually have been raging subsectors of tech, right? They've been lagging semiconductors because they're not AI, but they caught a leg up very obviously, breaking out of a long-standing sideways consolidation pattern the week we got CPI,
Mm-hmm.
right? So that's the week that I added them. I added software to my pad then. I'm not saying that it's performing great. I'm a little bit in the money, but my point is like that to me looks like, we had the long-standing consolidation. We are operating in a bull market, so I've got that behind me. But we had this long-standing consolidation in all three sectors where they were sideways after amazing bull market performance. We got the breakout in reaction to a piece of macro data, which I love. And it was, if you think about it, actually counter to the macro data, right? If you wanted to see tech explode, you would have preferred a miss in CPI, right? Where potentially rates can back off and tech can go, oh, I love low rates, let's go.
Definitely.
Right. And it was an opposite type of move where rates went higher and so did they broke out. So to me, that is like a pent up sector that no longer cares what the bond market is doing. This sector has now been held down for too long and it's now about to go in and rally for the next year. So it's going to be tricky doing that, trying to hold on to this trade through through the election.
Elections, yeah.
But, I was really psyched when Paul Tudor Jones came on CNBC earlier this week and says, I have some kind of mix of, gold, Bitcoin, and the NASDAQ. And I go to my clients like, hey, there's our view matrix right there, right? We've got software. So we've got the NASDAQ. We're long the S&P. We're long the stock market. We've been long BCOM for 2 weeks. So we were probably buying it when he was buying it. And we've been long gold for years. Right. So Paul Tudor Jones just kicked the tires on our portfolio here. And he says, we look great. I'm fucking thrilled. So that's quite honestly. But I do believe that I have not taken my eye off the ball in that 3-sector tech breakout. Right. I think that those are real. I remember the conditions that they broke out on. The breakouts are still sustainable. And I think that they're going to rally.
That's super interesting. Kind of like consolidating, waiting for the catalyst, but broke out on the anti-catalyst.
Yeah, like what should have been anyway. It's just too late, man. We're tech stocks and we're gone. You know what I mean? So it's like I have a feeling that's going to run. That's going to run for a while. So we'll see. That's my little bit of alpha that I don't think, at least that not everybody's talking about or something like that.
Appreciate that. Thank you. So that's going to basically do it for the technical stuff. I just want to ask you a few questions about being like a person, I guess. One of the things that I try and incorporate into my podcast, or have been the last few episodes, is like, what does it take to be a trader every day? What does it take to be someone in your position? I normally ask for one piece of like either advice or a story that you can give for people that might show them either who you are, how to be the person that you are, how to be entrepreneurial is what I normally say, but I don't know if you class yourself as an entrepreneur or a trader. So the question is, can you give me some life advice, I guess, personal or business?
Yeah. Okay. So I have a couple of things to think about around that, right? Like what I'm doing now, just so you know, is I run the TG Macro business, right? The newsletter, my Slack channel, my several podcasts, and I aggressively trade markets. Mm-hmm. Right. I am a professional trader, essentially. Like if I wasn't writing a newsletter, I would probably just be trading. Right. So that's like where my bread is buttered. And that's what I think about all the time. The reason that I'm 56 years old and I'm able to sit here comfortably and do that is because I paid for that education with my lungs. Right. I have the key to this game, first of all, is survival. So always think that I need to be alive to trade another day, right? That's got to be the first thing on your mind. I used to have a Post-it written on my computer for years like that, but that was after I blew up an account, right? I had an account where I was in a trade. Let's just call it this. Like I had a trade where I took an account from $50,000 to $300,000 to zero, right? And that was like getting shocked in an electric chair, right? And so I took some time away from the markets and I just kept watching and studying and watching and studying. And I got back in it with a different set of game rules, of rules, right? For myself and different circuit breakers and things that I learned from that blow up experience and what not to do ever again. And that's the stuff that sticks with me when things get stressful and I'm able to lose my ego and say, no, just trade what you see going on. Right? Don't be a wise ass and fade every single goddamn move, right? Some of these moves are taking place, right? Like get with these moves. And so I started studying the markets a lot more seriously by creating my own spreadsheet where I manage where I monitor the performance of all the equity sectors, the VIX, all the big macro indicators, the dollar, 2s, 10s, 30s, the curve, break evens, all of that stuff, a list of all commodities, and basically probably 30 sectors, ETF sectors of the markets, right? And when I started granularly following their performance over a week, a month, a year, right? Patterns develop, right? And people can call this bullshit. You can call it whatever you want. This is my tea leaves that I've learned, and I let that system show me what the market is doing so that I'm in sync with the market, right?
Sure.
When you start noticing the trends that take place, right? If you're a trend trader, you want to trade trends, right? They last for a long time, right? So if you carve them up into weeks and months and quarters and years, you really get a good look of when they started, when they broke out, when they were really performing, when they were struggling. And you see all of that against what interest rates are doing and what commodities are doing. And it really helped me put the whole picture together of this is what the world is showing you. Don't be an ass and try to be the other way. Do this, right? The world is showing you gold is rallying. Be in this, right? And that kind of turned my position around from saying, I don't do what I think anymore. I do what the market tells me it's doing. And that has contributed tremendously to my ability to survive. And that's really just kind of brings it full circle that's the name of the game. You know, you survive by being in the markets with the markets. You don't survive by battling the markets all the time. You know, so if you're constantly battling the markets and stressed and losing money, you're doing it wrong, man. You know, like get out of those positions. Be in the ones where your money's treated well and have good risk parameters on those and have a price that you're out of everything. You know, all of those parameters that you kind of build up over time that tell you how to survive the day, how to survive the month, how to live to trade another day. Once you get zapped by the third rail and blow up an account and you don't get to trade anymore, you learn that lesson of, damn, I got to get back in this arena. You know, like I'm a young guy. Like I see what's going on. Like I want to take risk in this market. Like I want to be there. You know, I want to make big jolly shitloads of money. I have massive utility for that. You know, I have 3 children getting out of college, right? There's a lot to be done. So I think that's the general lesson for me, Will, is that it's learning to survive. And, you know, you can pay your dues through lessons and things like that, but it's got to be that mantra of I got to live to trade another day, because no, I can't let one trade blow me up ever. You know, and I think that if you keep that in the back of your mind, and then the idea that I try to add after that is, you know, let the market show you what they're doing and go with them, because that's what being in a trend is.
Yeah, no,
those are the 2 bullet points for me.
Yeah, no, thanks for that, because I think I resonate with like those like stories, because I've had similar positions myself, like where I've blown myself up by I was trading super well, then blew myself up by trying to add risk and increase my position size, and then I started to worry about it a bit more, blew myself out of positions, then tried to chase positions, blew myself out of those, and then it's quite a like self-perpetuating cycle. And then that's why I spent a long time learning about macro, because I was trading just on TA and I was trading quite successfully. I think I was about plus 7% for over like 6 months or so on like a decent portfolio, or 8% or something. So it was all right. And then after I blew that up, I was like, whoa, I need to understand where I can get bigger winners, longer winners. I didn't blow myself up to zero, because I always had the mantra that my main portfolio is in crypto, in spot bags, I'm never going to touch it, but I count that as zero. But I wanted to understand more as to why things move in the cyclical way that they do. I understood why they did just from crypto, but I wanted all the things coming in. And then now I've started to notice patterns in the macro world, as you were talking about. So completely can relate to that story, but it's very like good to hear that. Like it helps me a lot with what I'm going to do going forward as well. So appreciate that. And then
Yeah, not at all.
is there anything on in your personal life that you could share with us about what it's like to be Tony Greer, like, and how you've been able to overcome like challenges or get to the position that you are, because you're obviously extremely successful and a really nice person as well. Like you're a very honest, genuine person. That's one thing I take away from you. So how do you do that?
You know, I've gotten tremendous humility from the markets over the years, man. Like I said, you know, I think before we were talking earlier on, you know, I sat in the firing lines for quite a while, and I learned as a young guy how humbling markets are. And I always try to carry that. You know, you noticed a couple of attributes about me that, you know, maybe my humility, I just try to be a nice guy. I respect people's rights, privacy, everything, you know, and that kind of thing. And you kind of got to apply that to your professional career while you're learning the markets and figuring out what risk is and things like that. And, you know, it's the thing where it's just kind of, you build up reputational capital over time. And it's important to have sort of goals and a team and a mission statement kind of thing. You know, those are the things that have kept me going through the point where, you know, my career hasn't always been, you know, right now I feel like I'm skipping along the highs, and I'm really proud of that. But there's been some severe dips, you know, in the meanwhile, since I've gotten there. I mean, I only became an entrepreneur 7 years ago, or 8 years ago now. In 2016 was when I finally broke away from, I I had an experience where I was an equity salesman at a great shop called Dolman Rose for like 5 years, from like, call it 2008 to 2013.
Mm-hmm.
And they were bought by Cowan and Company, right? And they let all the sales traders go. And so I spent the next 3 years what I called playing pickup basketball with my career and my clients, where I went from one shop for a year to another shop for a year to another shop for a year. And I was like, that's it. And the reason that I was leaving was because I was having, difficulty with management at the end of every year about every client, every contract renewal, right? And so I was like, I'm tired of dealing with the assholes in my life. And luckily I was blessed with enough support in my community where people were saying, Tony, just write about markets and sell it like Jared Dillian does. People are going to have to listen. You have the passion, you have the drive, you're a good writer, and that seems to be a good match. And so luckily, with the blessing of having a passion for writing, which I've had since 7th grade, and my mom told me that I wrote a really great birthday cards. She was like, you have to pursue your writing skills. She was like, you're unbelievable. You just wrote me a birthday card as like a 7th grader, and it was like the most beautiful thing I ever read. So I pursued my writing skills and worked on that, and it became a handy thing to go side by side with trading, because you write to know what you think, right? As a trader, you force accountable commentary onto the page, right? And then when you force accountable commentary onto the page and you put it in front of other people to read, they get value from that, right? You're pointing them in a direction that they may not have been pointed in. So that's the thing that's been driving me to continue with the Navigator and keep building the newsletter. Is I've been helping a lot of people, and a lot of people have been really grateful for the help. And it makes my day every time I get a reply to one of my newsletters that was like, thanks for having me positioned properly. Thanks for helping me think about markets. And so it was finally, breaking away from that beehive of like doing all of the wrong shit working for other people, to opening up the world and saying, no, you understand this. Like, you know how to present this, do it your way. And thank God it worked, right? So I'm here about to start on my 9th volume of the Navigator.
Nice.
On November 1st. Yeah, which I'm really psyched about. I'm going to have a big party on the 10-year anniversary, because to be honest with you, when I launched the first one, I didn't think I was going to last 6 months. I thought I was going to be out of business before I knew it. And like I said, by the grace of God, that didn't happen. And I'm here to continue writing. And now I've got, a kind of robust, a semi-robust business that I'm still working on growing, and a great community of 150 traders in my Slack channel that are talking about markets and news all day long. And that's a community that I'm so proud to have built. Now I've got my trading desk team, my references. I could probably get on any golf course in the country. Nice. with just a couple of conversations in my Slack channel, So I don't know. I hope that tells you a little bit about, and I'm also a family guy outside of the markets. Like I said, I have three children. One just graduated from college. I've got 2 that are in college. And, I live in a great house in Atlantic Beach with my wife, and I'm a really happy guy. So, hoping that translates into doing good business and being successful, and helping people like you whenever you ask, man. Like I said, it was really nice to be approached by a kind person in Twitter DMs for a change. And you had a lot of tact and a lot of personality. So I couldn't wait to get on the podcast.
Oh, no, it's super kind. And it's one of the things that I actually said to my girlfriend. I said to her, I'm so excited to speak to you, because I feel like our energy aligns. Like when I watch you talk, I feel like I know you, and that's such like a refreshing thing, and especially in the financial world, because people are so like over professional, and I find myself doing that when I'm on other people's podcasts. I just want to be myself. I just want to talk. So it's really great to hear those stories from you, and I can relate to everything. I just want to say, like, well done you for like doing what you've done. So where can people find your newsletter?
Yeah, man. Thanks. So, my website is tgmacro.com. There are samples of the website there. You can sign up, samples of the newsletter there. You can sign up for the newsletter there. You can find me on Twitter at tgmacro. Any of your listeners or readers can email me directly. Tony@tgmacro is my email if you have any questions about what I'm doing. And like I said, I'm really enjoying, like you're enjoying, the podcast conversations. I'm really loving what Jared and I are doing with the Macro Dirt podcast, and what Trevor Hall and I are doing with Clear Commodities. That's going to be a hub for commodity information that I think is going to catch fire over time. And those are the things I'm working on, man. If anybody needs me, just email me.
That's fantastic.
Or DM me on Twitter, something like that.
Cool. I'll have all your links in the description to this anyway, and I'll ask you for them like off camera, so they'll be easy to access down below. But I just want to say thank you very much for coming on my podcast and being my third podcast guest.
Ah, well, I'm totally honored, man. I hope to come back on again. That was awesome.
That's awesome. Thank you. Peace.
Peace, brother.